There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Friday. I'm Andrew Gagan. Good to have you with us as we close out the day and the week and getting to the market. We're just oscillating between red and green at the moment, currently up very marginally on the CBO 200. Healthcare has proved to be the biggest drag on the market. That's after the Trump administration slapped a 100% tariff on imports of branded and patented pharmaceutical products, taking effect from October 1st. Elsewhere, materials, perhaps the best performing sector, commodity prices continue to run. And we saw that with BHP doing very well this week. Lithium stocks also surging, led by Liontown. Vulcan Energy, another big mover too, after signing a new contract in Germany. Uranium stocks also making solid gains. Gold taking a bit of a breather though. Whereas silver is now picking up the pace in its place. All right, that takes us to the three themes of the day. Back in the black. Well, sort of, just, I think, black, green, whatever you call it. But as I mentioned, the market's just trying to find a bit of direction to finish the week. Health check, that does relate to obviously what we heard from Donald Trump. He has promised that he would hit those pharmaceutical imports with tariffs. He's now followed through. Those that are manufactured outside the states, obviously copping 100% tariff. And inflation, that's very much the case tonight in the US with that core PCE price index, which will certainly inform the Fed of its next move. Let's just catch up with those sectors I mentioned then. First one being healthcare, and as you can see there, they have taken a hit. They did come off much harder to begin the day on that news, but have pared some of those losses. Gold, that is just a little mixed at this point. Perhaps just taking a bit of a breather, as I mentioned there. And iron ore has been doing well. BHP leading from the front there, up more than 1%. And the banks, not a lot to write home about there. Commonwealth Bank up around 0.75%. NAB also doing well. And so these are the top stories. So President Trump announcing that he's imposing a 100% tariff on those imports of pharmaceuticals from October 1st. Also, Fortescue and Vulcan Energy have signed deals. Silver has hit a 14-year peak of $45 an ounce. That has seen those silver stocks move higher. And Sirius Resources does have silver, but also copper, and that came off overnight. Therefore, it has fallen. All right, let's get across what we've seen for the week and unpack that with Shane Oliver from AMP. Shane, welcome back. Good to see you. So, Donald Trump, he's back on the bandwagon with his tariffs, isn't he? So this time it's pharmaceuticals. Well, also I think upholstered furniture, kitchens. Some of this is a little obscure, quite frankly. But what do you make of this latest round of tariffs?
Well, he's had a good week, hasn't he? He's had an attack on paracetamol or Tylenol in the US, and then of course he's launched Escalator Gate, that inquiry into why the UN escalator did not work when he got to it. And now, of course, we're back to Friday, so we're back on economics, having gone through health and then the UN and now economics. As you say, he did promise these pharmaceutical tariffs. He's talked about them for a long time now. Obviously, the tariff roller coaster continues. We did see that pause after Liberation Day, which was good news. And then, of course, tariffs went up again on August the 1st. And this latest move on our count adds about another 1% to the average EU tariffs, taking it to around 21%. So obviously, as you can see on that chart, they're well up from where it was at the start of the year. Who knows where these things come from, and the logic behind them escapes me. I can't defend them from an economic point of view. In fact, I think it's a big negative for the US economy that American consumers will face these higher prices, or if not, companies will face higher costs. So that's not a good thing. It's not a good way to run an economy. But that's the reality as Trump sees it. It looks as if these tariffs are better founded than some of the other ones, because it's founded on Section 232, which enables the president to impose these tariffs after a review. And of course, that's what he's done, and he's saying that it's in the national interest to do this. Unlike some of the other tariffs, the reciprocal tariffs, which are under the Emergency Powers Act, and that's subject to court disputation at present. In terms of the impact on Australia, I'd have to say it's probably minor. Obviously, there has been some fallout for CSL because of the 2.1 billion of pharmaceutical exports that we have going to the US each year. The bulk of that is blood-related products, and it's a bit unclear as to what the impact will be on CSL. They're saying they don't expect to be impacted because of their huge footprint in the US and US manufacturing. But then Trump's wording says something along the lines that you need to be building a new factory or turning the earth or starting a new factory in the US, and maybe the CSL can still be caught up in this. So I think that's why the share price has been on a bit of a rough trot today for CSL. Economically, I don't think it's a huge impact for Australia, because 2.1 billion sounds like a lot. Bad news for those manufacturers who are in that industry, but it's only 0.08% of the Aussie economy, less than 0.1%. So I don't think it's going to cause a huge impact here. The real impact comes, I think, when he keeps putting these tariffs on other countries. For example, 60% of furniture imports into the US, and there's another tariff there, come from Vietnam or China. So obviously these tariffs affect those countries, and that could have a blowback impact on Australia. But by and large, I don't see a huge impact from this latest impost. It's just a reminder that he's still tariff man. He's still out there. Still wants something to fill the night's media with in the US. And obviously he's certainly done that. He still wants to fill the space, so to speak, so no one else can catch him. But obviously it's not good news, I think, for investors, even though the impact's relatively minor.
Shane, also we're just seeing equity markets taking a bit of a breather. That's off the back of the latest US data. That comes ahead of that key core PCE data tonight, which will inform the Fed of its next move. But some of those, there's that battle going on within the Fed at the moment as to where those rates are likely to go. What do you make of what you're seeing there?
Well, it looks messy to me. If you look at the US economy, you can make an argument that rates should not be going down. GDP growth last quarter was 3.8%, revised up, stronger consumer spending. Durable goods orders showed strength in capital goods orders coming through. And the unemployment claims still remain relatively low. And of course, you've got inflation stuck at 3% and more tariffs coming through, which adds to inflation potentially down the track. Now, the flip side is, of course, you've got these weak unemployment numbers that have been coming out over the last couple of months. And so therefore, when you look at Fed officials, in terms of their comments, they're sort of split. On the one extreme, you've got Stephen Mirren, the recently appointed Fed governor by Trump. He's talking about multiple rate cuts. You've got a few others like Waller and Bowman in between, and then of course at the other extreme you've got some saying, well, there's no scope to cut at all. The risk to inflation are on the upside, and then of course Powell trying to sort of drive that course down the middle of the road. So it's unclear, I think, how much further the Fed can cut rates. We're allowing for more cuts out of the Fed, but there is a chance here that the strong growth in the US could drag up the jobs numbers. Alternatively, it could go the other way. So a lot of uncertainty around that, and I think that's partly weighing on the share market. The share market rallied on expectations of lots more cuts. The last few days, that's been started to get questioned, and that's why we've seen the US share market come under some pressure.
And Shane, just briefly, against the clock, but of course we had that monthly read on inflation locally coming in ahead of expectations there. What does the RBA make of this? Certainly a zero chance being priced in of a rate cut next week, but further on, what are you seeing?
Yeah, no change to what we're expecting for next week. Always was not going to. I think they're always going to be on hold. But monthly, the CPI numbers do cause a lot of consternation. Very volatile, move around a lot, and we saw that back into the July meeting. Some high numbers for, I think, April and May, and then it turned out okay in June. Maybe we're going to see the same thing again this time around. But all that volatility also shows up in expectations for the cash rate for the end of this year. You can see earlier this year, the market expected the cash rate to go below 3%. Then it bounced up, then it came back down again. Now it's bounced up again. So I think we've got to be cautious about these CPI numbers. I think, yes, the RBA will be on hold next week, but their commentary will probably be somewhat on the cautious side, hawkish side, like it was in July. And then they'll tell us, well, we've got to wait for the June quarter CPI, which I think they're going to be telling us that for years to come, because they think the monthly is too volatile. We've got to wait for the next quarterly one to come out before they do anything. And I think ultimately they will cut again in November, but I'd have to say it is a close call, given what we've seen in terms of the inflation trend recently. But I think flip side to all this is trim mean inflation. Underlying inflation so far this year has averaged 2.6%. For all intents and purposes, that's at target. We are seeing some signs of upwards drift in unemployment, weaker employment numbers. There's still that threat coming from the US. Monetary policy is still tight in Australia. So I think there's still more cuts out there. It's just that maybe we were thinking there'd be 3 more cuts out there. It may just be there's 2 more cuts out there. But I think it would be wrong to read too much into that monthly inflation report because we know it's very volatile.
Shane, enjoy your weekend. Thanks for joining us on AMP.
Thanks, Andrew. Take care.
All right, let's get up to date with our stock of the day. It was in Purinix. Nadine catching up with Dean Fergie from Cyan Investment Management and Luke Winchester from Where We're the Capital.
I feel like this is just a little bit outside my knowledge base to make a firm assessment of, but from what I know, I probably wouldn't be investing at these levels given it's all pre-production. There's no real revenue coming in for that $2.5 billion valuation and potentially a requirement for additional cash at some point, probably in the near future.
So you would be a holder if you're in it, or would you sell and take some profits?
I'd be sensible like Luke and probably take a few profits if I'd been smart enough to get into it a year or two ago.
It's really hard to sort of get a feel for, other than just knowing you've got government support, which is a good backstop, I suppose. Like, what does revenue and profits and cash flow actually look like as these businesses scale? It's hard to say, and I don't think anyone, obviously you can have some models and have some guesses, but it's really hard to sort of flesh it out. So I'm the same. You have a run like that, super hot thematic, take some profits if you've been lucky enough to be in this one, especially if you've been there for more than a couple of years.
Right, let's get to the winners and losers in today's trade. Quick look at that. Well, there you go. Purinix, top of the list there. Up almost 5%. Liontown and the other lithium stocks doing well. On the negative side, Megaport actually coming off about 6%. Hub24 also on that list. Premier Investments having reported yesterday. Quick look at what's on tonight. It is that core PC price index. That's going to be critical as far as the Fed's next move is concerned. So let's watch out for that. All right, just recap where we're finishing. Pretty flat on this Friday. We've turned into the red again. So it is almost dead flat, in fact, on the day and almost for the week as well. That is the COB. Thanks for watching and listening.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.